Hey, welcome everyone to the Pro Trade Room Plus and the CPI report. My name is Lee Goldstein, the trading director for 10-minute trades. Please remember all the trades we discuss for educational purposes. I am not a financial advisor. All trades that we discuss are risky and should never trade money you cannot afford to lose. Good morning. We are streaming this morning, so let's see if the webcam works the way it's supposed to. My favorite headset is in Arizona, being replaced by Razer. So I've got my second favorite headset, the Turtle Beach Stealth 600, which is a pretty good headset. It just sometimes turns itself off randomly for no reason. Not sure why, but I made them send me an extra one. The new one does the same thing. So hopefully everything will go smoothly and easily with our CPI report. Don't forget, everybody, that margins are raised. So if you're a cash trader, you have to be aware of the amount of cash you have in your account. It's very important if they raise margins. Brokers have raised margins, or they will be raised a few minutes before the news on this report. I don't think it's necessary anymore, but they do. I never thought it was necessary. You know, most people know how I feel about it. The brokers are not protecting us from ourselves, they're protecting us from them. Always remember, the broker is your partner, but the broker is not your friend. Okay? They're not your enemy, don't get me wrong. Some of the brokers are very good partners, but you are your own person when it comes to trading. How can I say it properly? Um, Everything you do is on you. You take the responsibility. The minute you click that trade button, you lose the right to blame someone else. It's just that simple. You cannot believe the amount of blame that I get. But I'll tell you something. I don't lose a second of sleep. I shouldn't say that. I lose a lot of sleep at night, worried about not doing things perfectly. But you can't blame me. Okay, so that's my little rant for this morning. I'm just watching the opening markets. We're looking at gold. So we have a fairly new setup for today that I'll be using. Good morning, Chantal. We had a nice little API report last night. The range finally gave me a nice little range that worked. What am I thinking of doing here? I'm going to my indicator, net change display, which is a free indicator. And I'm just putting my ZF bonds on ticks. Now, if you're a cash trader, I like our trap trade for micro gold quite a bit on this report. If you understand the history of the CPI report, it is an inconsistent report. What does that mean? That means there have been a multitude of different instruments that have worked over the years on this event. And we've traded all of them. And you cannot find a single instrument and one singular setup that is perfect for CPI. There's too much variation in the way that the report responds every month. That's why reports are inconsistent. It's the variation of the response. It's not that our setups are bad. It's that one month you get a result that is completely different from the prior month. So that's why it makes it trickier. Last month, our trap trade worked perfectly. That's on the left. And the bond breakout worked nicely as well. If I was trading in my cash account today, I would trade ZF and I would also consider the micro gold trap. If what I'm going to do is I'm going to go a little insane today and I'm trading a full size gold trap. That's what I'm doing because I've got some prop accounts that I don't mind what happens. I mind what happens to them, but I feel that there's an opportunity here. The trap trade should be good. I have faith in the setup. It's not a guarantee, but I'll give it a shot. Now, I always try to adjust videos. I'm trying to click on a click in a video. It doesn't work that way. Anyway, if you watch, I'm showing last month's trap trade. It took a little bit of time to reverse, but if you just hung loose, it got there. It reversed, and we made a very decent profit on two micro contracts. Okay? So let's take a look at the DMM, which is our daily trade report. I'm just looking at the internet today. You know, streaming is interesting. I don't get emails um, telling people that, or telling me that my favorite YouTuber is streaming. That's not how it's supposed to work. You're supposed to get notifications. There's a whole notification system. Okay, let's find this DMM, the correct DMM, if you don't mind. So here's what we got. If you're going to trade the ZF, if you're going to go for bonds, I do consider it a risk 4. That's our highest risk event. And it's a bracket of 10. And you can see the targets are 7 and 16, and the stop is 15. When you read the DMM, I'm going to read it to you because I think it's important. This trade has seen multiple different approaches tested over the last several months, and it probably could say even longer than that, as the markets are very dynamic and inflation concerns have metastasized. We've settled on the MGC and ZF for now, after 6E and ES have been used and discarded with bracket and range trades. We've tried so many different setups. So that's why we are where we are now. So bonds are one possibility. Bonds are ZF 325. The reason it's ZF as opposed to ZB or ZN is the tick dollar value is the lowest on ZF. It's $7 and change per tick. So your risk is a little bit lower when you trade with ZF versus ZN or ZB. First, I'm going to set up the trap trade. First, I have to decide which account I'm truly willing to risk. So that's clear. So our trap trade, the only real difference between our setup on full-size gold and micro gold is the size of the stop. I'm not going to use a 65 stop on full size gold. It's highly unlikely that we would need a stop that big anyway. It's just that when you use micros, you can put that big stop in thinking, okay, I'll shrink the stop as soon as the opportunity allows. So it's important to realize that. Don't forget, you can shrink your stop. Stops are not in stone. A lot of people believe that stops are in stone, but they're really not. Stops get moved. I move my stops all the time, particularly also with magnet trades. If you're not flexible with your stops, especially on magnet trades, you will fail trading magnets. You've got to make sure your stop gives your trade room to breathe. So, here's how I'm going to trade our trap trade. I've got position size 1 is a 1, position size 2 is a 1. I'm going to activate the trade at 8:29:55. All that means is my orders are going to go on the chart 5 seconds before the news is released. My stop is 30 on gold, big size gold, and I'm going to use tiers. If we don't get a good size move today, I probably won't get filled because my tier is going to be 80. And I'm just checking my notes. Yes, my tier is going to be 80 and 110. And I'm going to label it trap. It's the only trap trade I'm trading today. Trapo. Going to call it trap. So that's my trap trade setup. If you're interested in seeing where your tiers are going to wind up on the chart at the moment, you can set your time to 0 just like we do with the breakout trades. Put the time to 0, activate time 0, first 2 numbers. Put your charts on sim so you don't accidentally get filled on a trade, although you're not going to because it's 80 ticks. So I'm not even going to, I'm not going to put my charts. I'm going to leave my charts where they are.
Order submitted.
There's my tiers. One thing I'm not real thrilled with is that my stop is right at the high of the day. At the moment, we still have 15 minutes. Things can change. Very honestly, I don't think we're going to get anywhere near there. I'll be pretty surprised. My gut feeling is whether we get filled.
Order canceled.
Unless there's a surprise in the news, I don't think we'll get that far. Now, Chantal is saying she thought we had 120. Not according to my notes, Chantal. So, what she's saying is you could, if you want to have a little bit of extra safety, you could make tier 2 120. Okay? 80 and 120 as opposed to 80 and 110. I think that we're going to be safe either way. So I'm willing to do the 110. And we did 110 last month also. Now I don't try to outthink the market. I don't trade the way Chantal trades. Short or long, I don't care most of the time. Everybody is totally entitled to their methodology of trading. And I'm not knocking or saying that she's right or wrong about whether she's going short or long or willing to go short or long. It's very rare that I will try to think about a direction. Generally, I'm going to just let the market put me in the trade, either direction. Now, it happens to be, I understand, gold. Gold has been a very, very bullish instrument to the point of real insanity. And that's the truth. You know, if you look at a chart of gold, let me go over the trap one more time for everyone. 829.55 on the trigger. The stop is 30. Tiers of 80 and 110. That means in order to get stopped out on a burst, we need a move of 140 ticks. Okay? Now, gold is somewhat bullish today. I'm trading it on a certain account, so I've got that account chosen. Right now, gold, if you look at net change display and put gold on points, because gold is calculated in points, you'll see that gold is bullish $8 at the moment, roughly. If you look at a 15-minute chart on gold, see, I'm okay trading gold in any direction. It was quite bullish yesterday, and overnight it has sold off of the highs. So we could go test the highs and then pull back off of that. That's why I'm willing to go short today. I'm not as concerned that we're only going to go short. However, I would rather get filled long. I would rather get filled. I'd rather it drop down and fill me long. That is what I would rather. So we'll see what happens. But I'll take today what the market gives me. Now, if you want to trade the micro gold setup, like I said, it's basically the same. It's a trap. Let me just look for one file. Let's take a peek. PPI. Hang on, not PPI. I want CPI. So if you look at our spike sheet, there's been moves of 105 ticks, 130, 104, 90. So if we get our worst move, 130 ticks, our zone of safety today is 140. So that's why Chantal is saying, you know, I like 120 on my outer tier a little bit better than 110. So anybody out there that's trading the traps, if you want to add a little bit of extra safety to your trade, your second tier can be 120. I'm trading it a little bit more aggressively. If there's a big move, if there's a big move, I'd like to get filled on both tiers. With such big moves, why not do a breakout? It's because of the type of move that you get, Ravi. You know, you could get such crazy whipping on this report that the only type of trade that really works is the trap. I mean, we've tried so many breakouts on these events, and there's so many whipsaws. That's why we go with traps when there's a history of whips. But sometimes you'll get a situation where both setups will work. We can get a breakout for all scenario where every instrument that we look at has a good breakout and it also reverses so the trap trade works as well. But there's been so much whipping on some of these reports, particularly with gold. That's the reason we do what we do. So I'm going to just watch bonds as a sim trade to see how they behave. So I'm going to put in my breakout. 829.58 is my trigger time. Our bracket is 10 on ZF. Position 1 and position 2 are each one contract each. And then our targets are 7. You know, targets are a range. You can use 6 and 20. You can use 7 and 15. You can use 8 and 25. You don't have to use the exact same targets, okay? We know that. We talk about that all the time. Our stop is 15. And if the target 1 gets hit, I would use my target 1 stop move feature and move my stop, to break even minus 3 or 4 ticks. Label it BRK, ZF, and then I'm just going to save a template for it. CPI, ZF, today's date. I'm looking over because I'm just curious to see who's there at watching us on YouTube. How do I feel about the bond breakout? So bonds have had about 30% whipsaws over the past year and quite a few good breakouts. So I realize, look, the reality is this is a very high risk event. Brokers raise their margins. This is one of those events that is high risk, extra risk. I'm setting my time to 0 on my ZF to look at my brackets.
Order submitted.
To manage the brackets.
Order canceled.
Putting the time back to 8:29:58. I do believe that this report has a propensity in the current time frame to reverse. Make sure everybody, please, that you have checked your time sync by going to the website time.is, right? Everybody, all the things that we have to do. Let me show you what I mean. I always go to the website. Time is before I get here. I do it. I do it first thing in the morning. Make sure that my computer is in sync. Whoops. Let's get the right chart moved over. Come on, where is it? Here it is. www.time.is, and it checks my computer to see if I'm in sync. So I'll only be paying attention to my trap trade. Bonds is strictly just for analysis after the event. Now, what I will set up also is after the news, just a single contract extra strategy reverse continuation. Maybe we won't get filled. One position. I'd like to have an opportunity. Maybe a trend will become obvious very quickly. And I'll do a 40 tick target on gold with a stop of 30. And I'll label that REV, REV. And I would do that in the same account I'm doing my trap. So I won't touch that unless my trap trade is over. And you can really set up a reversal continuation trade on any instrument you like to trade on this report. You could put it on the euro. We know the euro moves on this report. We know that even the British currency futures and the Australian currency futures are going to move on this report. The world moves on US CPI most commonly. The NQ, of course, you could do the Calvin 200 tick stop setup if you want an MNQ breakout with a 200 tick stop. You could try. 80 bracket is what I would use. The reason I don't show a lot of CPI videos is almost every video I'm going to show will be different because almost all the time we're trading it differently. Look, this is July. We had a YM setup that we did not really care for long term, and we were trading ZN back in July. So different setup. YM on the left, ZN on the right. YM moved early. And YM had a nice move that month. That doesn't mean the YM was a great setup over and over and over. And ZN looks like it had a pretty strong move. Interestingly, it looks like our prop account didn't get filled that day, or it got filled incredibly late. I can't tell actually by the video, but there's a lot of different types of reactions to this report. So I'm watching bonds on the right, and I'm trading gold on the left. And I'm trading gold on the left in a way that I expect a reversal. I expect to get filled, and then I expect the price to change direction. That's what I'm expecting. And I'm recognizing and repeating over and over that this is a high risk event. If you see the brokers raise margins, they're doing that because they're worried that there is danger. Will Smith, danger, danger, right? Danger to their accounts. So they want traders to not be allowed to take as much risk. So let's see what happens. And we will be back at 9:15 for the Bank of Canada rate statement. And then I do have a webinar today. If you could register for it, I'll put the link in after the trade or maybe in the next trade room. Festival of Traders. It's like a collection of companies, like a trader's corner kind of event. Run very nicely. It just doesn't feel like it's already the holiday to me. It's Christmas like in 2 weeks. It's absolutely incredible. It came out of nowhere. So my gut thinking here is we're not going to get a fill. That's what I'm thinking. I'm thinking we're just not going to get that big of a move. Now, unless CPI is higher than expected, if it's as expected, I don't think we'll get a fill, but we'll see. Here come my
Order
orders.
submitted.
Shrink my charts
Order
down.
submitted. Order filled.
The news is known.
Order filled.
Now, bonds looked like they popped up and pulled back. And then gold. Looking at the news, it looks exactly as expected. There is nothing out of the ordinary. It doesn't look like on this report. There's not a big enough move to get filled. First, I'm canceling my bond breakout. And I would cancel this trap trade. There's no reason to allow this trade to get filled. It's just not, doesn't make sense. Normally, I like to give it a minute to see what's going to happen, but it didn't come anywhere near the size of our tiers, which was my concern. But look, it was a concern that didn't worry me. It was a concern that I just didn't think we would get a very big move. I am canceling now.
Order canceled.
There's no trade. You could see what kind of spike did that whole candle. Exactly every piece of news here was exactly as expected. So you have no great motivation for price to do anything. Now, did anybody trade bonds with cash? That would be my question. Who traded bonds with cash? Real money. Anybody using our setup, not using some random setup. I'm not hearing or seeing from anyone. Now, it's no big deal if you don't get filled. Our setups are, they're set up to protect us, right? There will be trades that don't move that much. And yes, the NQ always is blasted, always on this report. The NQ it's incredibly difficult to trade on this news. The indexes are very difficult to trade on news generally. Now, the NQ, it might have gone down first. You have to look at smaller time frames to see what the move was. You don't automatically look at a 1 minute, right? You can't look at a 1 minute for a result on the NQ. If we shrink our setup time, our chart time, and go over to the NQ, and then we look, it sometimes is a little bit easier to tell what might have happened. What I like to do is I like to actually, what I like to do, like I was going to say, is actually run some replays. I like to see what happens with replays. But the NQ, you need sometimes such a big trap, and we've had some NQ traps. We have had some NQ traps. But you look at on a 1 second chart, if you look at the crosshair, 829, right in this area here is where our orders would go on the chart. And the NQ clearly went down first. So it's a question, how much did it go down if you were trading a breakout? That's why I like to look at the actual replay. I like to watch the data as it actually replays. But the NQ, now I was thinking, I have that possibility of a secondary trade. And sometimes the moment of analysis and you just miss your secondary trade, it looks like. So gold, which was fairly close to that low, it tested the low before the news and it's pulled off of it since. So gold, look at gold and look at the perfect VWAP magnet that it created. That's another whole methodology of trading news reports. You could totally forget about breakouts and traps, and you could just look for magnet trades on news. It's totally a viable methodology. Because look at the way gold behaved. It took its sweet time, but it meandered to the VWAP. Here was our trade candle. And then gold did a little bit more than a meander to the VWAP after the news. It pushed up 3 minutes, 4 minutes, and it was at the VWAP. The NQ, the market obviously likes this news. Market loves this news. MES or ES. Looks exactly like the NQ chart. Euro. Quite a bit different. The euro, it looks like it had a dangerous spike chart at the moment of the trade. So we didn't do anything wrong. Okay, we had a setup. It worked last month. This month, the perfect, as expected news worked. What I think we're going to get here now is a test, a magnet trade of the high, right? Certainly looks it. If you want to take a low risk magnet trade, throw your gold chart on MGC 0225, right? I'm going to get rid of all my strategies for a second here. So nobody answered about bonds. Put on a magnet trade here. High of day, low of day. 10% proximity. Put 2 positions. Look for an account to trade it on. Press apply. Okay it. Now, nothing's going to happen unless if gold decides to test and make a new low, then we could get a fill before that low. I don't love that because it just tested the low before the news. I'm not that interested in a short. Also, so I pressed the short button to turn off my short trade. Also, if you notice, gold is rather bullish on the morning. So if gold decided to keep pushing up, I think there's a good possibility you'll get a test of that high. Okay, let me just take care of something. I want to thank everybody on YouTube for watching and joining with us. I'm going to close our stream and remind everybody I'm going to put in a link to our webinar today. Festival of Traders, it's called. And there's a lot of people presenting. You know the deal. Everybody here goes to all those events looking for the Holy Grail. So we'll be presenting with a bunch of other Holy Grail vendors. And here's a link for our trade room members. And I do want to thank everybody on YouTube. Thank you so much for joining us. I'm going to close our stream and we'll see you. We are streaming again this week. I'm not sure when, so keep an eye on your notification. If you hit the notification bell, you'll find out. You'll get a notice.